Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we got Rocky Lalvani with us. Rocky is an investor and a Chief Profitability Adviser. That's a hard one to say for business owners. He is all about profit first. In fact, that is what he is here to talk about. So I am super excited because what is real estate without profit? So Rocky, thank you very much for hopping on the show.
Gabe, thank you so much for allowing me to be here. Excited to join you.
Absolutely. I told you before we got on the air that we always start with stories. We like to hear how people kind of got started in real estate. So why don't you take us to your story? How'd you get started from the beginning?
So I have a big gap in my real estate story. When we were growing up, we didn't have a ton of money. So if you wanted to live in a nicer house, you learned how to do everything. So I can lay tile, put up sheetrock, run the electric. I figured out how to do plumbing and everything else.
Yep.
I have an appreciation for the trades. And when I was in college, I got my realtor's license. I sold real estate. And then I got away from real estate and I went into a sales job and I did that for a long, long time. And I always knew about real estate. I always wanted to invest in real estate, but I just never pulled the trigger and took that first step. And then finally, probably like 20 some years later, I, just constantly saying, I want to do real estate. I want to do real estate. And I said to somebody, I'm thinking about buying a rental. And they were like, well, we don't like where we're renting. Give us some time and we'll think about it. And one day they call me up and they go, we're going to take you up on your offer. We want you to buy a place and rent it to us. I'm like,
wow, interesting.
So I had my tenant first, and then we went and we shopped for a property. I had spent so much time learning and understanding that I knew what to do. Just at least I thought I did, right? And we went out and we bought a property and they moved in and they helped a little bit with the carpets and the painting and all of that. So it helped me get started. And that was my first deal. Then I started doing more rentals and then we started flipping houses. And so that just kind of is what happened. So this all started probably 2011. I think a big part of the impetuous then was, hey, I just lost all this money in the stock market. Let's try real estate, see if I can lose it over there too. What the hell?
Totally reasonable. But that is, I can honestly say that is the first time I have ever heard someone say that they found their tenant before they found their building. So that is super unique. How did that come about? It was just a friend of an acquaintance?
It was a friend who was over for dinner. And I think I just got onto the topic because at that point, real estate had plummeted. And I was like, we've always thought about doing rental real estate, maybe getting involved. And I just haven't done it yet, And they were just like, well, maybe we'd like to rent for you. And it was just a casual conversation until 3 months later when I got a phone call. And that's what kicked me to take the first step. And then I was like, okay. Literally, I called up the realtor. I go, get me all listings over 180 days. I'm looking for divorces, problems, like get me a deal somewhere.
At least you know how to find deals.
I knew how to find, and that was the old way of finding deals, and we got much better after that. And we went and we literally looked at two houses that met our criteria. One was the other one was like, hey, this is perfect. Negotiated for about 3 weeks on the deal, and then they took it and I became a landlord.
That's great. So the question is, do you still have that property in your portfolio?
I do still have that property in my portfolio. Our current tenant has just said that they are going to be moving out towards the end of the year. And I think when they move out, we're going to sell it. And the reason we're going to sell it is our property prices have appreciated.
Yep.
Our rents have not followed as well, especially so this is an upper end. This is a Class A house, 4-bedroom, 2.5 bath, 2-car garage. In our market, I just can't get that premium rental. So at this point, with what I'm making percentage wise, it makes more sense to cash out and wait. I mean, had I done this pre-COVID, I would have cashed out and bought 2 rentals, half and half. And I probably would have upped my rent rolls by 50% with the same amount of money. It just wasn't this. I bought that property for a very different reason when I bought it. It was 2011. We still were unsure of where the economy was going. It's like, hey, I need an inflation hedge.
Right.
I was only 10 years wrong on inflation, right? So
but
that's
the
why
good thing is you analyze the situation in the current market. So it sounds like, I mean, I've always told people, keep your properties. You're going to regret it when you sell it, but that is not always the case. You're in an area where the rents are not matching the appreciation. So it makes sense in your situation to actually sell your property and take that windfall.
It does. And I think had it been a little bit more of a normal market. So what we've seen is prices really going up at the lower end, but not at the upper end.
Right.
And when they come back down, then I'll just go buy 2 houses at the lower end for what I sell the upper end for. And that'll be a much, much better cash flow situation.
Makes a lot of sense to me. And yeah, this is totally off topic. We're not going to stay on this very long, but I just saw I think America's most expensive house just went on auction in California. They intended to sell it for $500 million and it auctioned off at $129 million. That is quite a drop, because those upper end houses, man, you gotta watch out. You gotta watch out for those.
And that's what happens in our neighborhood. If you think about it, if you buy an upper end house and you're a buyer, you want what you want. You don't want what somebody else wants. And so it makes it very hard to sell.
Absolutely. All right. So that's how you got started. That's, it's great that you still have it in your portfolio. I always, those first houses that you buy, people tend to sell them just because they get in a situation where they need to, but you still have it. You're going to be selling it soon. But I want to move on because you are here to talk about profit first. And that is a topic that I feel is super important, especially on the commercial side, because so many investors, they buy a property not thinking about cash flow. And they don't really dig into the profit first model. So can you go over that real quick? What is the profit first model from a 10,000 foot view?
So Profit First is a book by Mike Michalowicz. Mike's a serial entrepreneur. He was not in the real estate space, but it's all the same kind of concepts. Sold some businesses, walked away with a lot of money, and quickly lost it all. Nice. And he said, how do we screw this up? Like, how is this possible? And what he realized is that we have the wrong equation for profit. We're told sales minus expenses equals profit, which means profit's a leftover, right? A lot of times it sounds like on your business deals, nobody is looking at the profit, the cash flow. It's a leftover. Mike said, let's change the equation to sales minus profit equals expenses. So we calculate our profit first and we take it off the top, and then we pay our expenses. And if we can't pay our expenses, we know our business model is broken. We have to do something about it. So in a situation like real estate, you make your money when you buy the real estate, right? Profit is not an event at the end with real estate. That profit is determined by how well you buy up front and how well your cash flow looks up front. And so you really need to take the time to do it. And I think too often in real estate, we get emotionally involved.
Yep.
And then we fudge the numbers to best case scenario instead of worst case scenarios. And we don't do all the modeling. And so Profit First is more of a mindset to say, hey, sit down, model out the deals. And so I'll do that. I work with a lot of real estate investors, and we'll look at, they'll say, hey, I want to buy this property. Okay. It's X amount of money. We're going to do an Airbnb on it. Okay. How much money are you going to make? This is what we think we can make. I'm like, those sound like tight margins for an Airbnb. I'm like, if the Airbnb market doesn't work in your neighborhood, could you rent it and still cover your mortgage? They're like, no. I'm like, oh, now we've got a cash flow problem, right? How easily could you sell this property? What happened in 2008? Did it work? Did it not work? So just running the different scenarios, looking at different exit strategies, modeling what the different things that could possibly happening, and put pen pen to paper. And the other thing we do is we actually take our money aside. So everyone calculates vacancy, right?
Yep.
Everyone calculates repairs. How many people actually every month take money out for repairs and put it in an account marked repairs? How many people take money out for vacancy and put it in an account marked vacancy? So that when repairs come up, it's not, how am I supposed to pay for that? It's, hey, we've got a repair budget. Go ahead and do it. I don't want to, but I can cover it. Hey, I've got a vacancy. My cash flow sucks this month. Oh, look, there's money in my vacancy account because I actually said I was going to put money aside for vacancy. So creating all these different pots to put your money into so that it's easily discernible what its purpose is and what you're going to use it for. And profit has its own pot, and we put money in profit, and then we decide how we're going to reinvest that. I think with real estate, people are, every time they see $1, they want to throw it in another property. And that's wonderful, but your cash flow implodes because it takes time for that dollar to bring the money back in the door. And then they wonder, well, I have all these rentals. I have all this rent. Where's my money? It's like you screwed it up because you didn't plan out your cash flow.
Yep. Man, that's a very timely message actually, because I'm the kind of guy, like I just go head first and I just get projects done. And I really am focused on making the needle move. And my girlfriend she's a little bit different. She likes to, look at the holistic picture and kind of see where the money's going. And so I had always been the kind who just, if the bank account was getting bigger, then I'm okay. Everything is safe. But she started, she set it up in my different property accounts. She set up a sub account that had repairs, a sub account for property taxes, a sub account for all these different things. And I'm watching it in QuickBooks, and I'm like, this is actually really genius. I mean, it's a really good idea. Even if I did purchase correctly, I still didn't have those bucketed amounts in the accounts, and seeing it in QuickBooks is actually pretty useful. So that is a really good advice that I would highly encourage others to take suit.
And that's exactly what we're talking about, is what she does. I mean, that right there, if everyone does it, that's perfect. And you don't need me to do that. You can go do it yourself.
Yep. And if, especially if you don't have, if you have a mortgage but the mortgage, the note servicing company is not taking out property taxes, that is such an easy bill to it sneaks up on you. It happened to me this year. There was a $10,000 bill that just came up, and I was like, where the hell did this come from? I totally forgot about property taxes.
And you knew it was coming. You just forgot.
Exactly.
Right. And that's what happens. And you start multiplying that, and things go south very quickly.
Perfect. I love it. So it sounds like, you've dealt with plenty of investors out there, who have issues like this. What is the margin for error that you generally suggest people build into their pro formas?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
So we build margin at every step of the plan, right? So if it's a rental, let's do a 10% margin on the income coming in. If there's a rehab, let's do a 10% margin on the rehab. So I try, and when we do a rehab budget, we rehab budget worst case. And then we do another 10%. We want to know that we've got margin, that if we keep screwing things up, we're still going to be okay. In today's market, that's really difficult to do, right? Yeah. And I get that. but everyone still wants to do deals. People don't have patience.
Yep.
And, that's a choice you make.
Yep. Yeah. Today's market, I mean, so I focus on self-storage and mobile home parks, and cap rates are down in the 6s now. And it's just like, it's just a really low cap rate. And there's not a lot of margin for error. So if you're out there looking at deals, I would suggest putting that 10% in there, just like Rocky suggests, because shit can hit the fan. You might run into maintenance issues that you didn't think were there. And when that happens, you definitely need that little cushion in there.
Well, I think the second half of that is, let's face facts. We are dealing with inflation today.
Yeah.
Interest rates have been artificially kept low by the government. They are now talking about 5 to 7 interest rate hikes this year.
Wow. I didn't know that.
Yeah. And they'll be small, but these are the conversations that are going on. I grew up in the late 70s and early 80s. I remember interest rates at 18%. Wow. I remember people selling houses and holding the notes at 12% because that was the only way they could sell their house. Nobody could afford the 18% interest rates.
Wow.
People today are buying payments. They are not buying the actual value of a property. If interest rates go up, one of two things has to happen. Either people are going to buy down, meaning they're going to spend, they're going to have to buy a lower property, or they're going to ask for discounts. And we have never seen interest rates this low in the past. This is, if you can lock in, like if you go buy a 1 to 4 unit and you lock in a 30-year loan today at 3, 4, 5%, that's your inflation hedge. As long as you keep that property in that 30-year note, you are golden. Go do that. That is the way to do it. But if you're getting a commercial loan and in 5 years they can call it or they can up your rates, you've got to plan for that. Our rent's going to go up enough to cover your new mortgage payment. And you can model all this stuff out. It's not that difficult to do. Instead of putting, 4.5% in the calculator, put 7 in and see what happens. You'll know. And that's the one thing people don't talk about. In 2000, and it is not even just 2008. If the bank gets a little uptight with you and they think your property prices have dropped, they're going to do margin call. And if you can't meet margin call, then they're going to come foreclose on your properties. That's what, Dave Ramsey. So
explain real quick to everybody what margin call is.
So let's say I've got $1 million in real estate and I need to keep debt to equity ratio 80-20, right? So bank lent me $800,000. I bought $1 million of property. Life is good. Property keeps appreciating. So they say. All of a sudden we hiccup in the economy, and all of a sudden the bank decides that your property is now only worth $800,000. And they're like, well, wait a second. We got an, $760,000 loan out here. We don't have any margin. Our investors and the regulators are freaking out over this. So I need to make sure we have 20%. So I need 160, you got 40. So I need 120 grand. Get us 120 grand, or we're going to sell off part of your portfolio, or and once you get into that cycle, I did not know that was actually possible. That is, if you don't have a fixed rate loan, right, for the 30 years, like a Fannie Mae or a Freddie Mac or one of those, or they have the ability, go read your terms.
That's crazy. Yeah, it is crazy. I'm really interested to see what these next few, years have in store for us. I just got a seller financed loan. I got a seller to finance a property for me, and I negotiated 6% interest. I thought that was super high. I was like, man, I'm giving this guy a deal. But I hear people, in a generation before me who were, who were buying properties in the 90s, the 80s, and those 18% interest is absolutely absurd. Nothing would pencil at 18%.
So the house we live in, we bought in 99. And when I bought this in 99, our interest rates, I think, were 8%.
Yeah.
And I've seen it drop all the way through. I mean, I paid it off, but like it continued to drop during that whole period. It wasn't that long ago.
Yeah. It's crazy.
People forget what it's like. And when you get into in those times, real estate is going to get affected. And I think that's one of the reasons real estate has appreciated is because the cost of borrowing money is so low, and the ease of borrowing money, especially in 2006 and 2007, was ridiculous. And we saw what happened.
Yep, absolutely. Well, hey, this is a really good topic to go on, and I love everything we've touched on, but I just checked the clock. It looks like we have passed our 15-minute mark, so I got to push us into the quick question round. Are you ready?
Yes, let's roll.
All right. It starts out with books, because I'm a big bookie. I know which one you're going to recommend, so I'm excited for this. Give me 2 book recommendations, one for general life wisdom and one for real estate specific.
So for real estate, the book on negotiating real estate, this is Jay Scott's book. This is where the money is made, the upfront negotiation, not at the back end, on the front end. And in general, the road less stupid. Advice from the chairman of the board, Keith Cunningham. It just teaches you to think about what you're about to do. So plan it out, think. And by the way, Keith lost a whole crap load of money, I think, in 2008 when the market turned down in real estate. So he'll probably tell you about that story.
I like the title too, The Road Less Stupid. That's pretty good. All right, moving on. This one is for your younger self. So if you could go back to the Rocky who was still an agent, just getting out there, go back to him, look him in the eye, give him one piece of advice moving forward.
Just go buy the damn properties now. Real estate is about time. I mean, I would have had so much more money had I just started buying properties.
That sentiment has been echoed across so many different episodes, is that investors all wish they had started sooner. So if you're just getting started out there, now is the best time. Go get yourself a property. All right. And then moving on, this one is for the US. There are plenty of square miles out there to invest in. So what market are you most excited about?
As I look across the real estate markets, I think what I see is really hot is Nashville right now. Booming.
Oh, I love Nashville.
It's incredible. The other area I would say is parts of Texas.
Dallas.
I'm just not a fan of Florida, but that's just me. I think it's a great market. I just prefer to live in the other areas, and I like to be local to my real estate.
Yep, makes sense. All right, so next one is your Superman strength. We are all gifted with something that we specifically can do very well. No one has an exception. We all have gifts. So what is one thing that you feel you are exceptional at?
The first electronic spreadsheet came out in the early 80s. It was called VisiCalc. I was teaching accountants how to go from paper ledger to electronic spreadsheets when I was in high school.
Wow.
All our deals are put on Excel, right? We run the numbers. That is what I do, and that's what I help people do. We just run the numbers. We look at good, bad, ugly, and we figure it out, and then we forecast cash flow. All done on an Excel sheet.
Oh man, you are the OG Excel nerd. I love it. All right, that leaves us to the very last question. You've given us a lot of good advice. I'm sure people out there want to get in contact. What is the best way for them to do that?
Hey, before you get in contact with me, would you do me a favor? If you like Gabe and the work he's doing here, give him a shout out, give him a like, give him a share. He would very much appreciate that.
And I appreciate that.
If you'd like to find me, I teach about everything I do so you can implement on your own. The best place is Profit Answer Man Podcast, and the website is profitcomesfirst.com.
Perfect. That is profitcomesfirst.com. I'll put that URL in the show notes. So if y'all want to get in contact with Rocky, just click a little more in the description. It'll pull down the full description, and in there you can find Rocky's URL. So Rocky, that wraps it up. Thank you very much for hopping on the show.
Thank you so much for having me. A lot of fun today.
Absolutely. And for everybody who is here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.